Hello, everyone. Welcome to the stock specific class here for Thursday, August the 12th. As we take a look at the market conditions here, the direction alerts, we are seeing things, the breadth pick up a little bit, which is a good positive sign. Momentum again, it's trending in the right direction. We're not in the extreme range yet. That's good. That tells us there could still be some more upside here in this recent rally. I know we're a little bit down today, or mixed. We've had mixed markets the last couple of days, which is usually not a healthy sign. That's usually a little bit of a warning sign. If you have the S&P up and the NASDAQ down, or vice versa, usually that's what it is. The S&P will be up and the NASDAQ will be down, or the Russell, or even the Dow. When we're going in a different direction, say the Dow is down a little bit, NASDAQ is up, it's usually a little bit of a warning sign. What you want to see is all the indexes moving in the same direction, and that tells you it's a little bit more of a healthy trend when that's happening. But it's not too surprising that we're getting a little bit of those mixed conditions with the market just moving sideways. It's telling me that money is just moving around within the system. There's not a lot of new money coming in to push prices higher. What you'll usually see in this type of condition is you'll see one sector be down, another sector up, and that's why you're seeing certain indexes up or down. Money will be going into tech. Seems to be going into tech today. It wasn't going into tech the last couple of days. We saw industrials have a good rally earlier in the week, and some of these other sectors, materials, and so the money's just kind of moving around. And what we want to see is all the indexes moving in the same direction, and we could get that soon, but that's something we'll keep an eye on. When you get a mixed market, it doesn't necessarily mean that immediately that's bearish or that's going to lead to some sort of a pullback, but it is one of those warning signs. And if you continue to see it in the next few days, where almost every day it's a mixed condition, then that would concern me a little bit. So we'll keep an eye on that. We look at Brett. You can see that we've been in the trending range for quite a while. Now we're starting to move into the high range. That's good. That means there's more participation going on, and that's always a good sign. And again, we're not near any extreme condition here. Sentiment is high, but not extreme. So all that looks pretty good. Buy-sell ratios, we've moved up. The overall market buy-sell ratio is, on Tuesday it was just over 1. Now it's at 1.25, so it's trending in the right direction there. More stocks moving into buys versus sells. Remember, we want to see that at least over 1 to get more aggressive with getting into new trades. If it's below 1, even if you're dealing with some high strength ranked stocks, if it's below 1, you can still have some of those trades that fail. Sentiment, we're not in the extreme range, so we're still good there. And if we take a look at the individual charts of the market, the SPY, again, we're just kind of grinding higher. We've talked about this a number of times. Just we're just not seeing that explosive move, but we've seen this happen before with some of these breakout moves. Here we had a breakout move where it's just kind of moving sideways. Hopefully we don't get one of these drops here, but this gets back to what I've been talking about, which is I don't think we're going to get a real strong push for several weeks or something like that, where you get a really strong push until you get a bigger sell-off. Some of these sell-offs have been a little bit more shallow. They only lasted a couple days. But I do think we could grind higher, and I think we'll probably, and we can have some decent up days here. But I think when this pushes into that extreme range, we're going to need to be worried about a bigger pullback. I think we'll get a bigger pullback. I've talked about how August and September tend to be the most bearish months of the year. So if we're going to get a bigger pullback, this would be the time of the year that would make more sense. But again, I don't, we're not in those conditions yet. I don't see any major warning signs of a imminent pullback. So we'll continue to monitor that, keep an eye on that. You can see though, again, Dow broke out to new all-time high yesterday. It's down a little bit today. NASDAQ had been pulling back for the last couple of days, but it's had a bullish, kind of a bullish reversal day today. As long as it holds this, it stays above this low right here, you still have higher high, higher low, still acting like an uptrend. If I can draw a better arrow there. So that's a good sign. Like I said, there's nothing that's really signaling a warning. I would like the Russell to participate a little better. It's down today, and it's just been really choppy. As I mentioned on Tuesday, we saw it really kind of take off right into here last week, and it was outperforming the rest of the indexes, which was what we wanted to see, more of that participation. But since then, it's just kind of lagged a little bit, and you can see it's well below its previous all-time high. So I'd like to see that get going. That's another thing we'll keep an eye on. That's another sign. That could be another sign of a healthy rally, as if the Russell really starts to participate. And if it doesn't, that's going to be a warning sign that we'll have to kind of keep an eye on. Or if it starts to move in the opposite direction, starts dropping, we'll have to keep an eye on that. I wanted to skip down. I'm not going to go through all the other charts. Usually I'll just do that on Tuesdays, but I do want to skip down to the VIX. VIX is continuing to move lower. So although we're getting pretty low, so sometimes there's a contrarian. You'll look at that when markets are reaching new all-time highs. VIX is at new lows, or at the low point. That tells you that complacency is starting to build, and people aren't worried about a pullback or a drop. And usually in those conditions is when you do get that bigger pullback. But again, I'd want to see other clues. I'd want to see the market rallying to those extremes. If we rally those extremes and we're reaching new lows on the VIX and that, then we're going to start taking defensive measures, because that's usually when you're pretty close to getting a bigger pullback. So like I said, we'll continue to monitor that. But again, when it gets down this low, you do start to get a little bit contrarian at that point, and we'll keep an eye on that. Now, a couple other indexes you can follow that tend to be leading indicators. I've mentioned this before in previous updates. The Semiconductor Index compared to the NASDAQ 100. Now, we saw the NASDAQ pull back a little bit the last couple of days. The chip stocks have really pulled back. That's a little bit of a warning sign. Like I said, they tend to be a little bit of a leading indicator. Now, this could just be a pullback within the trend. You did recently break out to a new all-time high right here, and it was leading the last little rally a week or so ago, when it kind of was moving. It moved up ahead of that rally, and so we'll keep an eye on this. But that is a little bit of a negative right there, that chips aren't participating. But you have the opposite. Another one you can kind of keep an eye on as a leading indicator is transportation stocks. You can use the IYT, which is the ETF for the transportation stocks. Again, this is the airlines, the Federal Express, the railroad stocks. How those trade tend to be a reflection on how the economy's doing, because they're moving the products around the economy. It's lagged. It peaked out back here, and the Dow has gone. Like I said, the Dow went to new all-time high. You're always comparing this with the Dow Industrials, Dow Transportation Stocks compared to the Dow Industrials. Dow Industrials closed a new all-time high yesterday. This is well off its all-time high, but we're starting to see it pick up. It had been trending in the opposite direction. We're going to watch this to see if it starts outperforming here. That's a good bullish sign. So we've got kind of a bearish sign with the chip stocks, bullish sign with the industrial or the transportation stocks versus the industrials, and So you could say, well, those cross each other out. Well, that could explain a little bit of the mixed market we've had the last few days. So, but we'll keep an eye on that. I think that's more of a bullish sign. You saw some really strong outperformance the last couple of days. Today it's kind of indecision day, but the last couple of days have been pretty strong moves. You want to keep an eye. This is the last previous high, lower high right here. You had lower highs, lower lows. You're going to keep an eye on, actually, this is kind of an even low right here. You're going to keep an eye on this previous lower high right here, because if we can break out above that, it could be a signal that you're reversing trend. You do have a little bit of a higher low right here. And if you go to a higher high, it's kind of those early clues that you could be reversing trend and starting to trend upward. So we'll keep an eye on that. All right, let's get into some individual stocks here. So the conditions, bottom line is the conditions look still pretty bullish. Few question marks, but you're always going to find a few question marks. And very rarely do you sit down and have everything point to a rally. And a lot of times, me over the years, that is a warning sign to me, because if everything looks like it's guaranteed to go up, it usually doesn't. One of my favorite phrases to use is when it feels safe to get in, it usually isn't. I've just been trained over the years that when everything looks perfect, it's usually not. So I don't like to see everything pointing to a rally. I know that may sound weird, but it tends to be that tends to be a little bit of a warning sign that you might be at a top when that happens. So don't expect that with your analysis. That don't expect everything to line up or want everything to line up necessarily. It's human nature, though. We don't want to lose money. Nobody wants to lose money, so we're looking for that perfection. We're chasing perfection. I mean, that's why some of you have gone from software program to software program and guru to guru. You're trying to find the one that's never wrong. And let me save you a lot of time and money. You're going to be doing that your whole trading career if that's what you're doing, because nobody's going to be always right, and no software program's going to be always right. So I want to stop you right now, save you a lot of money and time, and get you to quit chasing perfection and learn to deal with ambiguity sometimes. Learn to kind of just see the subtle changes and see and recognize the changes in probabilities. That's what you want to do, and that's what you want to get good at. And that's what I can help you do if you kind of follow along in these updates. All right. Let's look at some individual stocks here, and then we'll go through the portfolio. We're continuing to kind of go through the portfolio and manage it. We were up over $1,000 yesterday, I think, and then some of them backed off a little bit today, but that's going to happen. You're going to have up and downs. We'll go through the portfolio, though, and look at the charts, see if they still look good, adjust stops if we need to. Hopefully that's helpful to everybody that we're doing that. But we've been doing it, like I said, for the last few updates, because we want to just kind of show you. We've done a lot of these trainings over the last several months, and we're at the point where there's not a whole lot new to train you on, but we want to start applying what we've learned, and how do you kind of put it together and run a portfolio. So hopefully that's helpful to everyone. All right, so under the retail section here, under the holds, Dillard's, this is one that we've had in the watch list, and it'll probably, let's switch this over to signals here. It's barely at a buy signal today. I don't know if that'll hold into the close. That's always a little bit of a concern. We did that on one of the other stocks that we bought. We went ahead and put it in the portfolio, and then it actually, by the end of the day, it went back to hold. That stock still looks okay, but I'm going to go ahead and add this in today, just because this is the end of the week, and I won't be able to kind of show you how to add it in or add it in if I get the alert tonight. If it does stay in the buy range, I get the alert tonight. I think this is close enough, and it's been behaving well enough. It looks like it's getting ready to break out, and if it does, it should start to take off again. So I'm gonna add that into the portfolio anyway. But that one's one that we've been watching. And that's under the retail sector. I'll add that in a little bit later. Let's just kind of go through these first. Another one I like, I think I brought this one up on Tuesday was Big Five, BGFV. Oh, I don't know if I brought this up on Tuesday or not. I might have. If I did, I would have probably added it to the watch list. So maybe I didn't bring that one up. I think I was waiting for a few more days on that one. But this, again, it's what I'm looking at here is you've got this big pullback. Anytime you have a big pullback, I usually like that because it can lead to buying if it starts to go back up again. But you want to see some clues. You don't want to just buy because it's down, because it can go lower, and sometimes it can go a lot lower. But you start to look for clues. Does it look like it's reversing and acting like it wants to go back up? And one of the easiest ones is just, usually in the downward move, you're reaching lower highs and lower lows. That stair step, basic. I always call the stair step kind of the kindergarten training because it's just real basic. It's real simple, but it's really effective. I mean, if you can learn to recognize and see that stair step, you can see when it changes, and you can see real subtly right here. It kind of had a double top right there, had a double bottom right here. It really didn't do much here, but over the last couple of days, it's kind of gone to a higher high right here. It has a little bit of an even low, so it didn't go to a lower low through here, and it's going to a higher high. It just kind of looks like it's starting to cycle back up. Now, again, we'd all love to know for sure if it's going to go all the way back up, but you can't. But if you can see a little bit of that momentum, if you got a little bit of a clue that it could be turning around after a decent pullback, then it's all about managing risk. It's like, okay, this thing has the potential to go back up, and if it does work its way back up, it should go back up to its previous high, as long as the trend is healthy. And so, where am I going to get in and put my stops and things like that? You just manage the risk at that point, and then just let it do what it's going to do. By the way, some of these in the portfolio are likely to come and stop us out. Dare I say that? Probably they all take off, and you get a feeling that everything we put in there is going to kill it. But now this one we're going to put in the watch list to wait for it to go back to that buy signal, give it a little bit more confirmation. It is down a little bit today, and so we'd want to get that buy signal as that final confirmation, and to kind of double check to make sure it's still acting like it's turning the corner. But I like that one. Let's go into computer and technology here. NLST, we've got this one in the watch list. I still like this one, but you can see what we were talking about on this one was that this looks like an ABC pattern, ABC, this kind of sharp move down right here. That looked like it was correcting this stronger move higher. We were down right around that 50% retracement area there. I mentioned when I brought this up on Tuesday that I was hoping that it would kind of stabilize right here. I wanted to see it kind of move up from here. Yesterday it moved up a little bit higher. Today it's a little bit flat, but it looks like it could be starting to trend back up again here. We're going to wait for this to go back to a buy signal as well, so we want a little bit more confirmation on that before getting in. But that one still looks pretty good, so I'm going to keep that one there on the watch list. Now, one that we have on the watch list under computer technology, but I'm going to boot it out today, is this SGOC. I mean, it has 97 strength rank, but the problem with this, I mentioned this on Tuesday, was that it's getting down. You're getting below that 618 retracement. Here you had your big burst of a move up. Usually you don't want it to retrace much more than 50%. 50% is kind of the rule of thumb. Stocks will tend to retrace about 50% of their moves. This one now has gone beyond that, and it's still dropping. Last 3 days, it's still dropping. I'm going to kick this one out of the watch list because, again, part of the problem is you don't want your watch list to be massive with, just tons of stocks in there. Don't be afraid to boot some of them out. If this is still performing well and it starts to move back up, it's going to stay in that. It still has a pretty high strength range, so it's going to stay in that list. I'm going to look at it again, probably in a for the next week or two. And if it is starting to move up pretty strongly here, I can recognize that. I could always add it back in. I don't like that real deep retracement. And usually when you move past that 6 and 8 retracement, that probability shift is pretty dramatic, meaning that it becomes much more likely at that point that what you're dealing with is a downtrend as opposed to a pullback within an uptrend. And the risk is this thing could have, because it's retraced so far, it has a higher probability of coming back down here to this range than it does to move back up. Now again, that probability can shift back again, but that's where it's at right now. So I'm going to boot that one out of the list today. I'll do that when we start monitoring the portfolio and everything. I think this is a new one in the computer technology watch list, but I like this GSAT Global Star. I might have gone over this one before. And this is another one where if you look at a little bit of a longer term chart, had the deeper pullback right here. It started to kind of stair step up, higher highs, higher lows to here. Now, I had a little bit of a deeper pullback here, but it hasn't gone to a lower low yet. This looks still a little bit kind of corrective, a little choppy on the pullback. This is a little bit more impulsive on the move up. But I'm assuming then if this thing could get back to that buy signal, it'd be a little bit more confirmation. It's probably, we can look up here. If you're wondering how close it is to getting to that buy signal, you can look up here on this little slide bar. See, it's right in the middle of the hold range. So it probably needs to move up a little bit further before it gets to that buy. So this probably has a few more days, but we'll throw this in the watch list there. And by the way, this is another one, it does concern me a little bit that it was starting to move up pretty healthy right here, but then it came all the way back down. Didn't go, like I said, didn't go to a lower low yet. That is a little bit of a deeper pullback though. But if this thing goes back to a buy signal, I'll want to reevaluate. I'll look at the chart again and see how the chart looks and if I still kind of like it. But we'll at least get that alert when it goes back to that buy. We'll set that up for the alert. And then one last one here under computer and technology is this MGNI Magnite 95 strength rank. And this is kind of the same thing. If you look, this is pretty similar to the last one, although this one did dip a little bit lower recently. But you have the big pullback. You're going to like the big pullback there, and then you want to see signs that it's moving back up. Here it was higher highs, higher lows to here. It had a little bit of a dip right here that went to a lower low. Since then, we've got higher high, higher low right through here. And so what I'm going to be looking at on this one, I want to go back to a buy signal. And I'll probably reevaluate it as well. But it's pulled back the last couple of days. I don't want it to dip below this low. I don't want it to go to a lower low. If it does, we'll just boot it out of the watch list. And again, it won't do us any harm because we wouldn't have gotten the buy signal anyway to get in. But if it can hold that, and probably when it gets back up to this area right here is when it will get that buy signal. But if it can hold here and have a higher low, and then break out to a higher high, we might be interested in getting into it. We'll see. Another thing about these watch lists too is that we can throw stocks in that are kind of iffy, and then we don't have to buy the ones that go to a buy signal. Don't feel like you're obligated that just because it goes to buy signal you have to get into it. We can reevaluate it, and if you have other stocks that are looking stronger, if we have other ones that look a lot better, and let's say we have 5 stocks that look pretty good, but 2 of them look the best or look a lot better, we'll go with the 2 that look great. We'll pass on the other ones. We can be picky. We don't have to kind of force it. But so this is kind of in that iffy range, but I'll put it in there, and then we'll kind of reevaluate if we get the buy signal, get the alert on it. But I just wanted to point that out, that we don't feel like we have to get into the ones that we like, and we're going to get to a point where we're not going to have enough money to. We're going to have a full portfolio. Hopefully we can cycle out of some of these where we we cash out of them and move on. But we're going to have to get a little bit more picky or selective down the road when we start to get into more of these trades, when the portfolio starts to get filled up pretty well. All right, let's a couple more here. Let's go into tires, trucks, and auto tires and trucks down here. NEO was one we looked at, 93 strength rank, a little on the lower end there, but a lot of the stocks in this sector are on the lower end. This one went back to a sell signal here, but again, it looks like you have a possibility of a little bit of an inverse head and shoulders pattern on this one. I might have pointed that out on Tuesday, but now if this thing keeps dropping and gets down to this low right here, we'll probably boot it out. But as long as it kind of holds right here and goes back to that buy signal, it still looks good. I still like what could be forming here, but we definitely want that confirmation on this one. But I'll keep that one in the watch list for now. A new one. I don't know if this is, I think this one's new. I don't think I went over this one Tuesday, but on here, let me make sure I'm in the right sector here. Superior Industrial Industries International, SUP at the top, 96 strength rank. Again, what I like about this is you've got this impulsive move up, and then again, this is choppy as it's kind of pulling back. It's kind of more sideways. This is a corrective type move. Usually when that's done, it'll start taking off again. Now, it does concern me. It's been moving sideways for a pretty long time. That's a lot of indecision. Although you can see real subtly here, though, it was kind of stair-stepping down a little bit through that sideways move, and now it's kind of went to a higher high right now, although it went to a lower low right here. So it's maybe that's just adding to the indecision. But I think it'll probably get back up near this high right here when we get the buy signal. We can check on that here. Actually, this is pretty close to getting to the buy signal. You can see right here. But there again, if we get the buy signal, we can reevaluate it and see what we want to do. See if there's better patterns out there that we might want to consider. That one looks pretty good. That one looks okay. We can, you back out and look at a little bit of a longer term chart. You can see it's had, here's a pretty big consolidation before it really broke out. That's what you're kind of hoping for, is that when this is done, you get one of these bursts of a move right here. This is a little bit of, when it broke out of here, it didn't go very far, but out of this correction, you got a buy signal right there, and had a little bit of a decent move when it broke out. And we are seeing in the sector is starting to kind of move a little bit. President Biden had a news conference I think it was last week, where he was really kind of pushing for electric vehicles, talking about replacing government fleets with electric vehicles and things like that. So there's definitely a big push in this administration, and whether you're for that or against it doesn't matter. If there's money flowing into it, you can make money off of it. You want to, as a trader, you don't want to be too political to where you don't make, or you avoid making money. But you want to see where the trends are and take advantage of the trends. So that it seems like there's kind of that push there, and you want to try to take advantage of that. So keep kind of watching the industry, these industries, some of the ones that could be benefiting from that. And I don't know if this one's even involved with electric vehicle. I don't know much. I don't really know anything about this company, but I know that NEO is, and some of the ones you might find in this. I think we got into Tesla as well last week. So, or maybe we got into that on Tuesday. I can't remember, but I think we got into that one on Tuesday. All right. And then under the buy, this is another one we could consider getting into today. But this FUV right here, 91 strength ranks. It's a little bit, but you can see a lot of the strength ranks in this sector are a little bit lower. Sometimes I'll look at that as kind of a relative strength rank. You get. I know when I'm looking under the materials sector, mining and stuff like that, or even like home builders. If you look at the home building or construction sector, you sometimes get lower strength ranks, but yet the trends still look pretty good, or the charts still look good. Kind of keep an eye on that, to where, you know, certain sectors might have a little bit lower strength ranks, but they could, you know, if you have a nice pattern there, they can still work out pretty nice and allow you to kind of keep being diversified. One of the dangers you have to be careful of is, you always hear people that talk about managing portfolios, is you don't want to have everything in one sector or one group. You want to be diversified a little bit. And so in order to do that, you might have to consider, I usually still don't like to go below 90, but I'll look at that and look at relative strength rank compared to the sector sometimes when I'm looking at that. But FUV right here already has a buy signal, but what I like is that it's starting to break out. In fact, it did break out a little bit on Tuesday, and it had the big pullback already. Let's back this out a little bit. We can see had a really deep pullback right here. Had a nice run up here, deep pullback. And you can see right here, you had a higher low, higher high, slightly higher high right here. So it's kind of breaking out. So again, it looks like it's kind of turning the corner a little bit. You get that kind of bowl-shaped move. It looks like you're on the right side of the bowl. And you know, if this is working its way back up, there's no reason to not expect it to move back to that previous high. And so from a reward to risk standpoint, there's potential there for a pretty nice reward for relatively small risk. So that's kind of what I like to look for. So we'll add this one to the portfolio today, and go from there. Let's look at a couple more, and then we'll get into the portfolio. Let's look at under consumer discretionary. I like this FLL, Full House, 96 strength rank. And again, it's recently had a sell signal, but again, you had the nice deep pullback right here. Yesterday, it went to a higher high, had an even low right here. It kind of looks like it's turning the corner a little bit. And again, we're not making a decision to get into it until we get the buy signal. And so we'll put that in the watch list to see if that continues to work its way up, continues to kind of look like it's coming up the right side of the bowl. And then one last one here under consumer discretionary is this BSET, Bassett Furniture. It's right in the borderline. They're 90 strength rank. Really deep pullback, but it's kind of rallied up pretty strongly here. Now we don't have any. This still hasn't broken to a higher high yet. Still higher, lower highs, lower lows. And so even if we do get a buy signal on this, we might want to wait for it to at least give us a higher high, at least show us a little bit more that's breaking that downward move. But we'll put it in the watch list and see what happens when we get the buy signal. It's still a little ways away from giving us the buy signal. So, and again, keep that, I did mention earlier that just because we get a buy signal doesn't mean we have to get in. We could always look for a little bit additional confirmation. If I'm real close to a breakout area, or in this case, wanting it to go to a higher, at least to show me a higher high after having lower highs and lower lows during the downward move. Let's say I get a buy signal right in here. You can always wait another day or two and get that a little bit stronger confirmation. I don't mind doing that. Sometimes if you get too caught up in prices, you say, yeah, but if I got in right here and it goes up to here, $27, I get in at 25, I would have made $2 if I got in right here. Yeah, but you'd have a stronger probability of it going higher right here. And if you're expecting it to get all the way back up to here, why not give up a couple more dollars to get that stronger probability, and don't always think in terms of money, because that's what gets you into low probability trades a lot of times. And if this doesn't give us that extra confirmation, this thing could still be in the downtrend. It's been doing that. It's kind of teased you a little bit through here, where it was rallying. It looked like it was moving up strongly right here, rolled over and dropped. Looked like it had a strong move up right here, but it rolled over and dropped. So, be willing to give up a couple dollars sometimes if it means a stronger confirmation, particularly if it could lead to a much bigger move. You're expecting a much bigger move. That'd be a much stronger confirmation that this thing is turning the corner. And who cares if I'm giving up a couple dollars to get that stronger confirmation? It'll make you a better trader if you're willing to do that. All right, let's manage the portfolio here. First of all, let's see if we need to adjust any stops. PSTT, I'm not going to make any adjustment on this one yet. I'm still waiting for it to break out, but it still looks like it's going to break out. It kind of moved up. It moved up to the breakout area right here, and I went ahead and got in, just expecting that, with that movement of moving sideways right here, there's a pretty good chance it's going to break out. But it still kind of moved a little bit sideways. But that's good, because this is one of the best patterns to trade, is what we call a cup with handle pattern. Here's the cup, here's the handle. When these break out, the rule of thumb is that they'll typically, at a minimum, not always, but that's why they call it a rule of thumb. It's not a law or exact expectation there, but you can take the top of the bull, the bottom of the bull, take that distance and project it from the breakout area. And so that's why these are great patterns to trade, is there's a very high probability it can make that move, not immediately necessarily, but kind of work its way up. So our stop is down here. I don't want to adjust it yet, because this handle could still be a little bit of a wider back and forth move still. So I'm still fine with giving it a little bit of flexibility. Now, once it breaks out, I'll probably move it up into this area right in here, where it was kind of consolidating a little bit. But that's still a little ways away. RM, I can't remember I think I adjusted this one up to right around in here. This looks like a normal little pullback. This looks like a step within the stair step. And you had this little move right here, and then it kind of moved sideways right here. This move up, it's like it's just kind of pulling back a little bit. Looks like a little bit of a possible hammer candlestick formation right here, which could mean that retracement is over. It starts to move up again. You haven't quite retraced. Well, after this little sideways move and this, you've retraced about close to 50% of that move, that little burst right there. So it's kind of retraced about 50%. And it doesn't have to retrace exactly 50%. It can be a little bit less than 50%, a little bit more than 50%. That's just kind of the rule of thumb you look for. So you have that 50% retracement with a possible bullish hammer candlestick formation. This one still looks good. By the way, this is why your portfolio is going to fluctuate. It's going to go up and down. This is why you don't want to panic if it pulls back a little bit right here. What you want to focus on is, is it still acting like it wants to go higher? And so far, this looks like it's acting like it wants to go higher. And that's why I don't mind being down a little bit from giving back a little bit of this explosive move that we got. We got in, I think, right in here. So we caught this first explosive move. And I don't mind giving back a little bit of it, as long as it's acting like it still can move higher. And this is being able to do that and recognize price action and all that. That's what helps you be patient, helps you be able to stay in your trades. And that's what helps you get those bigger returns. Now, it also doesn't guarantee that this is going to go higher. We could have there could be bad news that comes out. This thing could drop That's fine. That's why we have our. That's why we moved our stop up. We had originally had our stop down here when it broke out. So this, I waited for the breakout. It broke out. Then I moved the stop up right into this area right here. So we are reducing our risk now. We got in right here. We're stopping right here. If this thing comes slamming down and stops us out, okay, it's fine. It looked like it was going to take off. It didn't. And the good news is because we got that explosive move, we were able to reduce the risk. I do like to try to reduce the risk as quick as I can, but I don't want to do it just to do it. You know, that's why I'm still waiting on the other stock there that we just looked at to break out, because I don't want to just do it to do it, just to move it. I want to wait for that breakout and then move it up a little bit closer and reduce that risk. MSTR, another one. Again, this kind of looks like maybe wave A, wave B, wave C, a little bit of a pullback here. I want to keep an eye. There's a little bit of resistance right here that it broke out above there. That can act as a floor or support when it comes back down. So it's possible this could come back down a little bit further. And I think I moved the stop because it did break out. I moved the stop up into here. So I think I'm pretty sure I reduced the risk on that one as well. I'll double check that. We should have the stop at around 615, I think, somewhere in that area. And so again, we've reduced the risk on that one as well. Let me double check that here, but I'm pretty sure I adjusted that. Oh, maybe I didn't. Stop is at 5.9. Well, let's do that then before I forget. Let's adjust that up. Let me take a look at where that low is. That low might be below 615. Let's see. That low is at 606. So let's bump it up to 605. I clicked on the wrong one here. Hold on. Here we go. Let's change that to 605. Oh, someone comment. I did move it. I moved it up to 590 last. Okay, well, we moved it up a little bit tighter. Then we're a little bit closer there. I think I did. So I did. I thought I moved it up. That's all right. Moved up a little bit closer there. I think we're still fine. All right, on Mara here. We want to make sure, like I said, the pullback doesn't bother me too much. Here's a breakout area. We want to see if that holds. It doesn't have to. It could dip a little bit below that, still go, but you want to keep an eye on that. That's an area where it should kind of find a little bit of support. And it did come off the lows of the day, so it is showing a little bit of a bullish candle. I'd like it to close higher than the open. It's still lower than where it opened, but and we could probably, I don't know if I have my stop. I think we can move our stop to right below here. I don't know if I did that already. I'll double check that, but let's see what that low is. And what I'm doing is I'm putting my mouse on this low. That was the low of this pullback. I want to get below that low, the stop below that low right there. And I'm looking, so I'll find the day of the low, which is this day right here. And I'm looking at what the low of the day was right here. The reason I'm showing you this is it's going to be different. I can't. So you want to be looking right there when I put my mouse over this this day. So the low is at 26.20. So we could put the stop at 26. Let's do that. Oh, I already did it. Yeah. Well, I'll try to make sure I take a little more time in my prep to not to remember which ones to adjust and which ones not to, that we already adjusted. So that one's already been moved up. ASPN, ASPN, this is the one that went to that buy. It was at the buy signal and it dipped back down, but we had gotten into it already. This one still looks fine. You can see it's kind of choppy as it's pulling back. It still would have a higher low, higher high right here if it holds, as long as it kind of holds. And it's kind of pausing in this area of the breakout area there. So that's a good sign. I'm going to keep the stop down below here though, because I want it to break out again before I move that stop, and then we'll move our stop up below this low right here. If that holds as a low, we'll move it up to there. But and another thing to keep in mind too is I like to adjust stops based on the chart, but that's because I know how to read a chart and read the price action. You know, if you're not quite confident in that, you could just put in you could just put in a trailing stop where it just automatically moves your stop up when the stock goes up, or you could use just a straight percentage that you want to stop out at, or you could do just a dollar trailing stop. I want it to trail the stock by $5 or something like that, or there's different stop approaches that you can use. I'm going to kind of do the one based off of the chart here, because that's a little bit more complex, and that's something that I can show you and teach you. You know, just putting in like a 5% trailing stop doesn't need a lot of training on that. You can just go ahead and do it. And so that's kind of be my primary stop approach. Is I'll kind of take a look at the charts, wait for it to break out, look at the previous low, move it up, and we'll kind of take that approach in the trainings right now. So we're holding on to that one. Riot. Wait, let me go back to Riot here. Let's see where I put the stop. See if I moved it up on that one. $20.50. I think I did. Oh no, wait, it's still down here. All right, let's move our stuff. No, I'm going to wait. We had a little bit of a breakout right here, but it's still kind of iffy, and with it being down right here, I don't want to have to stop too tight. I'm going to leave it down here actually it's down here. Actually, I could move it up below here, move it up just a little bit. What's that low? 23.93, so we'll do 23.75. Or we'll do 23.80. There we go, 23, oops. And I do want to adjust the stop on STKS. Not by well, where did I have it originally? You know what? I'm going to move it to right here to $9. It's not below this low right here. I don't like that. That's a pretty strong bearish reversal candle. It had a nice strong move up. I don't trust that, and I want to tighten that. So I'm going to tighten that stop up a little bit. It's not much. Our stop is down below here, but it'll be a little bit of an adjustment. I think if this came all the way back down, that'd be pretty bearish. Because if it did, what would also be bearish is this would look like a bearish head and shoulders pattern if it did that. So let's move that one up to $9. And I know this is going to drive some of you nuts, because there are going to be some where I'm gonna, you know, if I go back to this chart right here, on some of those, I didn't want to move it up too tight because they hadn't broken out yet or something like that. I'm going to make a lot of discretionary decisions here, but usually, like I said, I'll have a reason for it. I'll try to explain the reason. Like I said, I don't like that big bearish reversal candle today. You can see it too if we switch it over to candles. You can see a big red down day. So it opened higher, but it came all the way down. We call this a bearish engulfing candlestick pattern, where that whole day today, if this holds, the whole day engulfed the day before, and it's in the opposite direction. Now, you see this a lot as a bearish reversal. It could mean, not guarantee, but it could mean this thing has further to drop. Now, it could be very temporary. It could drop a couple days, come down into here, and then take off again. So I don't think our stop moving it up right here is it's still giving it plenty of room. But if it came all the way down that quickly, that's not a good sign. Because remember, if you get impulsive up, you see that right here, impulsive up and then impulsive down, that's usually it's a sign of a potential trend reversal. Now, we don't have impulsive down yet. We just have one down day. But if we go down a few more days there, especially if we come all the way back down, we just saved ourselves a little bit of money by reducing the risk. We still have a loss, but we got in here at around $10 or $9, right around there, and we get out at $9. We only lose $1. That's not bad. I got to speed things up. We're running out of time here. Tesla. I think Tesla's still fine. I don't want to make an adjustment here. We're still kind of moving sideways. That's good. That's bullish. So that still looks good. Now, real quickly here, we're going to add DDS, Dillards, to the portfolio. So let's click on this blue button right here, add to portfolio. And I want to add it to the stock specific class. I'm going to put the stop down below this area right here. I don't know if you can see it here because but down below that sideways range. I'll come back and we'll look at it. I already determined where I'm going to put the stop, and I'll explain why I put it there. But I'm going to put the stop at 160. Let's see if we did 100 shares. Let's see what our risk would be. 2%, that's too high. So 50 shares, that's on the borderline there. I don't want to be up. Let's do 40 shares. There we are. We're close, just over 1% risk, portfolio risk there. All right, let's go purchase and go to my portfolio. And let me pull up the chart real quick. So what I did is I looked at what this low was, and then we put it just below that low. And hopefully this thing breaks out soon. Now, it could come back down and still be in the sideways range and stop us out. But this has been moving sideways for a little while. I think it should break out here pretty soon. I think we should be fine with that tighter stop right there. All right, and the other one I wanted to get into was FUV. Better be careful how I say that. That was under the auto tires and trucks. Oh, that was actually I was under the buy section of the auto tires and trucks here. And I'm going to put the stop low here. So let's add to portfolio. Stop in at about $12. See what 100 shares looks like. Yeah, 100 shares too low. Actually, we'll get 200 shares. It should be perfect. 200 shares divided at 1% portfolio risk. Okay, let's do that. All right, I'm gonna add. Well, first of all, let's go to a watch list. We got a couple more minutes here. There's a lot of stocks I was going to add to the watch list. I'm going to add like maybe 2 in class here, but then I'll wrap up the class just to show anyone how to do it if they're new, and then I'll add the rest of them outside of class. So I'm going to add all those ones that were at hold signals that we're waiting to go to buy. But for the sake of time, I'll just do a couple of them in class here. But so click on the watch list tab, or watch list tab up here. We want to, this is the market update watch list. I want to go to the stock specific class watch list here. Now we can take Dillard's out because we got in. Let's remove that one from the list. And then remember, I was going to remove SGOC right here. I didn't like how far that dipped. Again, to kick it out, you just click on the X button right there. Real simple. All right, we want to add a few more. We wanted to add, let's go into sectors here. We wanted to add, in the retail sector, we wanted to add a big 5, BGFV right here. So we want to click on this little green button right here. That's your watch list to add to the watch list. If you've got several different watch lists, you got to specify, well, even if you only have one, you got to specify which one you want to put it in. We want to put it in the stock specific class. And then save and go to watch list right here. And then we want to add an alert right here. It'll send us an email alert when this thing goes from hold to buy. So we don't have to keep watching it every day, although we still go over these in the classes here. But click on that. It'll say email alert when it goes from hold to buy. Click save. And it'll send us that email when that alert takes place. And by the way, I'm going to get an alert probably tomorrow. Well, no, I kicked it out of the watch list, but I would have gotten an alert if that DDS, Dillard's, holds that buy signal going into the close today. It would have sent me an alert, but I kicked it out of the watch list, so I won't get that alert. But that's fine. We're already in it. But that one, that would have sent the alert. All right, let's do one more on the watch list here. Under computer and technology, we were looking at this GSAT, Global Star. And let's add to watch list here, stock specific class, save and go to watch list, and then add our alert right here. That's it. All right, I'm going to wrap things up. I'll add the other ones to the watch list. We can go over those in the next class. Have a great weekend. We'll see you on Tuesday for the market update. Bye, everyone.